Good afternoon, traders. This is Christian Farmer at Tribeca Trade Group, and this is your end of day as well as end of week market recap video for Friday, May 9th. Very rainy here in New York. Very, very rainy. Flood warnings. So let's get to recap the week a little bit here. What I'm going to do for you this week is kind of just recap things, talking about what I thought coming into this week were some of the major things to watch, to pay attention to, and how they kind of evolved, and what we got in terms of results from those things, and what some of the takeaways are. Also, just leaning into next week a little bit, what to watch for next week. We'll talk a little bit about the technicals. We'll talk a little bit about some events to watch for next week, and if we're seeing any hints right now about direction in this market. Well, let's start with that. Before I do, risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only. Okay, so let's talk about where we are and why we've got a little bit of indecision going on in the markets. Well, I always like to go over this 1 hour chart a bit, because the 1 hour chart, while it's very short term in nature and a bit simplistic, but it will give you a sense of like what sometimes you could kind of see the direction unfold when you draw in a little bit closer, and then when you zoom out, you can kind of see a little bit where we might where that the beginning of a move might be shaping up in terms of the bigger context. I could tell you, so I kind of led you down a little bit of a bad road here, because I don't really see anything in this 1 hour chart that is pointing to a direction as of yet. I see some indecision in the market right now. So if you look where we ended up for this week, is basically almost where we started. I think the S&P was down just slightly for the week. And again, just a decent amount of indecision. A couple of times we tried to break to the downside. Didn't happen. Kind of tested that range a couple of times. It looks like we were going to kind of, especially on the Fed day, move over a little bit and start moving, heading down a bit on Wednesday. But then we had a positive headline that brought us back up. Did we break out or start to take that next leg higher? We tried to, but we're rejected, right? And there's a bit of overhead supply, which we know is going to be a factor from time to time. And that overhead supply won out on Thursday. So whenever we approach one of these blue lines, it becomes a battleground between new buyers and existing sellers. Overhead supply. The overhead supply went out for now, and this market is not convinced yet on what direction to go. So again, just as Mr. Powell said on Wednesday, uncertainty and wait and see 15 times. I think, this also is a little bit of waiting to see, and probably indecision that is in the marketplace. That's probably the word I'm going to say a lot in this video. Now, before I kind of jump to another index, I would say how well the 200-day moving average is helping us. Anything that I have on my charts, or anything that you have on your charts, should be able to help you, to give you some type of insight on what's going on. Some people like a lot of indicators on the charts. Some people like just watching price. I like to know where there's focal points, where things may stop, where things might get going, where there's significance, where things are significant on my charts in terms of resistance, support. I like to know all that because, I am a trader. I trade both in the short term and for the longer term, but I like to know where there's resistance. That 200-day moving average comes into play quite a bit. And, we know that there's various different market participants out there, but there's many that are not technical wizards. And they will look at some things simplistic as the 200-day moving average, and they may have models built on that. So I, find that information valuable. I know some people like to look at the price action and it looks more cleaner to them when you don't have anything on there. But again, if you're a trader, you're going to want to know where resistance is. And you could see there's been a couple times here, both in the S&P and both in the Qs, where we've hit right into that 200-day moving average and have gotten rejected. So that's where the decision comes into play. We're also right now, the S&P is between its value area for the year and that 200-day moving average. So that's why I use both, right? The value areas will give me some really good significance because it's looking at all the activity from the prior period. In this sense, that big gray box is all of the price activity and the volume activity from last year with roughly one standard deviation. So we're using stats, and we're using a lot of stats here to come up with that, and it does become significant. All right, so that's things that I'm watching here is whether we're going to stay above here or stay above and maybe continue higher, and that would be a break of the 200-day moving average. Now, a couple other things. I also like to note, I also use regular plain technical analysis. So there's patterns that we're aware of, one of which is the head and shoulders pattern, or in this case, the inverted head and shoulders pattern. I see a lot of this going on in single names where I've seen inverted head and shoulders and a breaking of the neckline or getting rejected at the neckline. I've seen both happen. This sense, it kind of feels like we're building out in another inverted head and shoulders. It could be where basically the 200-day moving average is the neckline. And again, some of these, the head and shoulders patterns don't have to be perfect. A lot of times it's not a full completion of a shoulder, or sometimes there's a double shoulder. But I see left shoulder, head, and possibly either a right shoulder here, or maybe we have to come back down and shake everybody up a little bit and form that right shoulder, and then maybe begin to break above that 200-day moving average. All possible things that could happen. Hey, I thought in the beginning of this month that we would maybe come back and check down to the bottom of the value area for the month, and we never did do that. So again, these are all possible scenarios that you can make up, and you can make up whatever scenario you like. Really, it does help, I think, to have a little bit of the thought process of what could happen, and then make adjustments as soon, whether or not that actually does happen, or price leads and does something else, right? But I find it a useful exercise to go through that. The Qs, same thing here, getting rejected once, twice, 3, 4. So this is the 4th day. Now we're not losing any ground here, which is good, but that's the 4th time that price has been rejected at the 200-day moving average over the last couple months. So that's acting as a barrier, but we are still above the value area for the year. But this could break in any direction. It really could. And I think, that is going to be very important. And it's going to be very important to whatever way that we break to basically, if you're wrong about the direction that you think it's going in, don't stay wrong. That's important. Same thing with the Qs here. We did nothing all week long except explore both sides of the range. Next week, I will be watching like right around this 488 level, see if we stay above the value area for the week. Notice a couple times we violated that value area, but we kind of, it was almost like a beach ball underwater a little bit. Maybe not a full beach ball, maybe like a tennis ball or something, or a smaller flotation device, because it wasn't that big of pressure to get back above. But I think you see where I'm going with that. It's Friday, so bear with me a little bit with my analogies. IWM, which has been leading the move, has a little bit more of an upward trajectory in the short term. Now, this is what makes things so complicated. You think, oh, geez, IWM, really nice. Yes, and it's been leading a couple of these moves. However, just so much overhead supply. I would watch that VPOC up there at 204.22. Another thing that I've gone back to a couple times is IWC, which is the microcap ETF, which has also had a nice move here from the lows. So I think that also has been nice, but have to get over that VPOC that's right in front of it. All right, so that's what we've got for a summary for the indices. I'd say a lot of indecision on our hands, going back to kind of the theme. Well, let's take a step back. I mentioned in the beginning of this week, number one, coming into this week as price was going higher, we didn't really see anything like warning signals. We didn't really see any divergences. We didn't see like new lows picking up, either 4-week or 52-week. Is that same in lines with breadth? We didn't really see breadth begin to kind of give us a warning signal. We didn't really see anything majorly that in my analysis, that I saw as a warning signal. Well, are we seeing anything now? Well, we could kind of look at our midday note, and I try to give you some good information in this midday note. The 4-week new highs, still plenty of more names that are making 4-week new highs. Even though the S&P was down today, you had more names making a new high versus new low. Okay, so that's not a warning signal. That's not a divergence. So that's pretty good, I would say. What about 52? That's the 4-week. What about the 52-week new highs? This I think it does not look great. This has been one of my complaints recently, is that the names that were breaking out to 52-week highs they were the most low volatility names out there, such as Philip Morris, Altria, RSG, with Republic Services, which is a garbage stock. We saw exchange stocks like ISE make a new high. That made another new high today. We also saw very low volatility healthcare names, CAH, McKesson, MCK, make new highs. That's not when you see the most like minimum volatility, some would argue recessionary type stocks come out and make new highs. That's not the greatest signal in the world, that those are most of the names that are making new highs. You could see 52-week highs. We only had 6 today. Some of those names that I mentioned just a minute ago have corrected a little bit. They came off those highs. I think they got rotated out of a little bit, and they went into a little bit more of growth stocks, just a bit. Mosaic made a new high today. Paycom, PODD. Okay, this is a little bit more aggressive. Interesting that you've got a couple agriculture names in here now too. Monster Beverage, another name that made a 52-week high. Again, this is just S&P names. I don't want to dig too much further into this because I'm looking at the SPY chart. Okay, now let's talk about what unfolded this week. Well, we know 2 things that I said were going to be some of the most important things this week. One was the Fed meeting, and 2 were all the earnings reports, because this week we saw earnings reports from a lot of the growth names. Now, how did that turn out for the growth names? It's a little bit harder to quantify. I don't have stats for you right in front of me, but I think we saw both. I think we saw some growth stocks go down and some growth stocks accelerate to the upside. I mean, pretty meaningfully. And that happened, when you look at like yesterday, SEZL, Dave, which had continuation I mean, there's some great stories from this week. There's no doubt about it. Look at look at the stock today, was up again, right? What the performance was up another 9% in this thing, right? I mean, so you look at a couple of things and you're like, man, this market might be like set up really well, considering that there's like this is SEZL, which tacked on gains today. Very impressive to see some of these names. And this is what we want to look for, I think, at the end of the day or the end of the week, as it is now. We want to be compiling lists of names that are doing this. And that's what we're doing. That's what I do. I compile a list every week of some of these names that are going to be, potential leaders for the next quarter, right? We see that over and over and over again. So, like, for example, it's the same thing when companies do this. Like Odd was one that we highlighted last week. Look at Odd still going. There's no sellers in this thing, right? So you look at this stuff and you're like, wow, there's some really, again, there's some good things going on. No doubt about it when you see things like this. No sellers in here. And by the way, why is this stock still going up? Well, I try to considering we had a lot of earnings this week, I'll rehash this really quickly. When a name does something surprising like this, and look at the volume, many institutions, which ultimately do drive the market, are not positioned in some of these things. And they're like, hey, this company came out with a really good quarter. I don't own any. I'm going to have to start accumulating some of this thing, right? To get it so they have to chase a little bit. And it's the same thing. For example, I'm going to bring up TTD because this is a good point, which had a nice move today, right? Up 18%. Notice what this stock did, because again, I want you to take away some lessons. I try to bring up some lessons that you can learn from in these videos. Was this a good buy at all last quarter? Like, I mean, forgetting about today's earnings, right? If you bought the dip in this thing, so it works both ways. I talked about a couple names that um, moved to the upside pretty decently and had follow through. It's the same thing on the downside. Once a company misses, you have people trapped in the stock. You don't have people wanting to buy the dip because this is new information about the stock that you didn't have, that they're not executing well. So depending on your time frame, what I do is I don't buy the dip in these things, because if you bought the dip, maybe you waited 3 days or something after TDD reported earnings. That was at 79 bucks, right? And even with today's 18% move, you're still underwater, right? Because it doesn't pay to buy the dip when something changes in. And again, the reason why I bring this up is because a lot of retail traders have struggled with this point. They think, oh, it's down, I'm going to buy the dip. It's a good opportunity. No, it's not. It's not usually, right? And again, we work in probabilities. So I'll say the majority of the time, when a stock goes down on earnings, it is not a good opportunity to buy because something has changed with the stock, right? It's not the same stock anymore. It's not the same because they have missed on earnings. So congratulations if you bought it down here, or if you bought it yesterday, you made nice gains. But if you bought it right after it reported earnings, you're not doing very well. And you lost all that time too. But what happens a lot of times is the stock becomes dead money, at least until the next quarter. Or if they happen to, there's exceptions. There could be an activist that comes along that helps the stock go up because they're gonna oust the management or do something like that because the company's doing so poorly. But they're gonna come in and make the tough changes. All right, I'll move on from this, but I bring up these concepts frequently because I see this happen all the time where stock goes down on earnings and retail traders are like, I'm going to buy it. And they have no game plan other than they see it down and they think that's an opportunity. It's not usually because the stock becomes dead money. All right, let me keep going. All right, so that's the one takeaways. We got a lot of names that did well. We also had a lot of names not do well this week too. All right. I mentioned, I don't know where the stock finished for the day. All right. The stock was not down that much, but I've talked about inverted head and shoulders, and sometimes they fail. Right. Look at the failure here at the neckline. All right. So there's your failure there. Doesn't mean the stock's done, but that's a fourth time in a row that coin has gone down on earnings. All right. What about, I talked about the Fed. Right. Well, this is kind of important. At least I think it's important, even though I think some people are kind of, I don't know, it doesn't seem to be on the front of people's minds. It seems to be more about, what Palantir's doing or what Tesla's doing, which by the way, had a great day today. But this, I find that this is going to be difficult. The reason why, in my experience, since I started trading, is I like to be going with the market when the wind is at your back. When is the wind normally at your back? Well, it does have to do with whether the Fed is injecting liquidity or taking it away from the market. And we know right now that the Fed is at 4.5%. The European rate for ECB is at 2.5%. They've been cutting interest rates, and our Fed is not. So we don't have any stimulus. We don't have any liquidity being inserted into the market. And again, to go back to on Wednesday and the takeaway from that, Mr. Powell said, wait and see about 15 times. So he's not willing to budge from his position. So we only have a 17% chance of an interest rate coming in June, which again would only take us down to four and a quarter, which is still a very high interest rate. And if you go to July, it's only a 50% chance. So I find this very difficult because I think this is one of the things that could maybe get us over the hump, right? Is to understand that if the Fed is inserting liquidity into this market rather than tightening, which is what we're in right now, we're in a tightening cycle with interest rates up 4.5%, there's less appetite for stocks. All right. So that's a major issue. Now, The Fed used to be data dependent. They're no longer, for whatever reason, they're not data dependent anymore. Why do I say that? Because we heard them, that's what Powell used to say. Well, we're data dependent. Well, the last CPI report that you got, right? No, really made no reference of that inflation was muted, both in the CPI, PPI, PCE. Now, that's just one report. So do I want to jump and say, oh my God, inflation, we don't have to worry about inflation anymore. No, I wouldn't say that either, but I would say we're getting another data point next week, right? And it's actually like a pretty high bar or a low bar for for like if this number comes in 0.1 or 0, right, the market has the chance to take off. I mean, how many reports do you think, again, I don't have the answer to this question. I like to kind of insert some questions, but how many more reports do you think that we are going to need? Let's say this report, again, I'm going to just be devil's advocate because I don't know what the number is going to be, but let's say it comes in 0.1, right? When you analyze 0.1, you're going to get what, 1.2%, right? Yeah, I'm just sorry. It's been a long week. Right? You get 0.2%, it's going to be 2.4. Again, all I'm doing is annualizing the recent number, right? I weight the year over year number, by the way, this 2.4 is just if you add up the previous 12 months of reports, that's how you get 2.4. So if we come out and it's 0.1, I mean, how much longer can Powell, here's the, look at this column, please. Right. So it was negative 0.1 last time. We haven't had that in years. When's the last time we had a negative reading other than last month? 2020. So what's going on here? Like so again, we need to see more continuation than one report. But I would say that's at least that's interesting. I didn't hear anything about this at all in the Wednesday's Fed meeting. So if you're a market bull, you're going to want to see another report that comes in muted like this. I don't think it needs to come in negative 0.1. I think 0 or 0.1, I think will be good enough because again, you can annualize that. Now, again, look at how we started off the year, right? Very hot report. February was a little bit lower, and let's hope that we kind of stay low. All right. So in any event, these are the things that I think are going to matter at some point because I do believe if we get one or two more reports of muted inflation, I don't understand how the Fed could continue to ignore it for that much longer. All right. So now again, notice I'm not talking anything about tariffs. Yes, that's an uncertainty. We don't know how the 90 days are going to go up. So you've got to go with the data at hand. Personally, what I would have said if I was Mr. Powell on Wednesday, again, sorry I'm spending so much time here, but it's important because I think you need to have, well, one of the things that would really help this market is if you had more liquidity in this market versus tightening. But I think all Powell had to say is, hey, we like the direction of the data and how it's going. And he could have used hey, we're gonna wait and see, but we should be on track to cut rates, provided that we don't see an uptick due to some exterior. Like if he wanted to say tariffs, that's fine. But I don't know how you could ignore the last reports, considering you've said data dependent several times. All right, so that's my thought on that. And what we have to watch for next week. Let's review, so sectors. Still, I would say, like, are we seeing anything that looks really exciting here? I think the utilities still look the best out of the group. Nice back check here. This is the equally weighted sectors. I think the financials are starting to look interesting, starting to recover. And there's a number of single name setups that, let's look at Tesla for a minute. Speaking of the 200-day moving average, finally a move above the 200-day moving average. By the way, there is a lot of automated driving stocks that were up very decently today. I don't know if that is a tariff situation or a trade situation. This is a smaller cap name, Ouster, right? And a lot of LiDAR names too, by the way. But this name did report earnings. I think they were upgraded as well. LiDAR technology company, all right? Very nice numbers. AEVA. What is a symbol I've probably never traded before or heard of? Look at this stock. Did not report earnings. What's going on here? So again, what I'm trying to do is just give you some observation. Sensing and perception paradigm for autonomous machines. LiDAR. So even, a name that hasn't done very well recently, Mobileye, was up today. Kind of interesting, right? And I think that's what propelled Tesla today. Autonomous driving. Rivian was up decently too. Saw a lot of call activity. So anyway, so again, it's not to say that there aren't good looking themes out there, right? Good looking things that happened this week. Definitely there were. I'm just looking at the future and what's going to drive this market. Let's review this week's performance. All right. Yeah, not too much going on here. As I mentioned, small caps actually eked out a gain. S&P Qs did not. Not much going on in international markets this week. EM, EFA both down a little bit. TLT was down. This should be in the green because gold was up decently. Very interesting. Gold and Bitcoin both up this week. Both value and growth were down this week, but there were bright spots. Solar names did well. Gold miners did well. Clean energy did well. Semis were up 2% this week. Aerospace and defense, which has been a leader, up 1.2%. Industrials also continue to have some good results, earnings results. What's not looking good? Biotech healthcare stocks down 8.5%. China did not do well this week, even though China and the U.S. getting together this weekend, talking it out a little bit. I think China has bigger problems, and that's why they're stimulating so much. But that's outside of this recap. Consumer staples fell. Internet FANG stocks took a breather this week. We're down. Argentina led. A lot of that is because of Melli. We could finally maybe get this break? I've been watching this chart now for weeks with Argentina. Closed very strong. 3 names in Argentina that I'll review for you really quickly. Melli, which had an inside day today after the big gap up. YPF. Nat gas name also looking pretty good here. Higher low. And GGAL, which I tried to trade a couple weeks ago, did okay with the trade. Nothing crazy, but that trying to turn higher, not the best close for it today. So that's where I leave you. And I think it's going to be interesting. A lower inflation report next week. I don't want to, sorry, I'm putting so much emphasis on that, but I ultimately think that the Fed is going to have to do something this year, hopefully sooner than later. And that would be a good catalyst for the market to go higher. So stay tuned. I would say, don't stay anchored to, what you want to happen. Understand that we could either push through here or we could kind of come back and form out the rest of the right shoulder here. All possibilities in here, but for now, I would be watching, keep it simple, 200-day moving average and the top of the value area for the year. Guys, have a great weekend. If you like these videos, please like them, and that helps a lot. Retweet and make sure that you're signed up for Substack. I try to give you as much quality, good information quickly as possible. Try to make it so that you could read this very, very quickly and extract a lot of information so that you can get a good pulse, a good sense of what the market is up to and what the major themes are for the day. Hence, I wrote about Tesla today and Rivian. Have a great night, everybody, and have a great weekend.